Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay. We talked last night in the evening webcast about the importance of the hourly mid-band and how that was going to be a bull bear and a delineator, and I was very interested to see what side of that line we woke up on. Well, it is to the upside of that line. You can see here we're back to dealing with the 100-day exponential moving average on the continuation chart, which is at 2902 area. On the front month, 2902. Hourly chart, here's your hourly mid-band. We talked last night as it was, about here. It had been underneath. It had tried to get up over. Then it did. It broke out nicely, wound its way all the way back, and then on the back of this Gilead news, and then we had advanced GDP, which brought it in a little bit, but it's holding. The point is, it's holding above the the hourly mid-band. And as long as this area wants to be support, it is going to be very tough sledding for the bears. We talked about them being able, whether or not they were going to be able to take out that 29.13 from yesterday. Well, you had a little spike high. It's been rejected a little bit. We're trading 29.04, but it opens the door during the course of the day, if the bulls are able to continue to grind this thing to the upside. You've got a situation now where you are 112 handles below the weekly pivot, about the same with regard to the 50-day, the 9 days in the dust. You didn't really give them a chance to test the daily mid-band. So bottom line, fight it, don't fight it. I wouldn't fight it. There's a bid under this market. We talked yesterday about whether the bulls would run away. And the thing that the bears keep doing, and we talked about this last night, is the bears have created support floors in this tape. Yesterday's support floor that was created was at 52 to 54. You had a little dip overnight to 51. Then you spent the rest of the day going to 54, 54 quarter, 52 and change. There's only so many times you get to go down into an area and not be able to take it out before it becomes, what I called it last night, a granite floor under the market. That emboldens the longs. It makes every dip a buy, and we go higher. And that's how rallies are sustained. So this big push down on the close to try to take that out, we were in the middle of the webinar when it hit, and it's like, look, they didn't get it done. They didn't take it out. It's a problem. It's a problem. Well, now it's about a 67, going on 70 handle problem. So don't fall into the trap of, well, now we've gone up too far. When's enough enough? The tape will tell you when enough is enough. Not you, me, or anybody else is going to know that. Well, my target was, was below this. It's nice that you had a target. That's very cute. The target is where price starts and stops. That's the target. So as long as these dips continue to be bought and it continues to go for a ride, don't fight price. Respect risk, respect price, and take advantage of the upsides. You can still be short from time to time. We did more handle short yesterday than we did long, but you have to be opportunistic. And don't fall into the trap that I fell into yesterday, which is, I'm taking 20 handle middles, and it's like, well, let's see if they can take out 54. And you end up giving that runner back. I gave a 20 handle runner back yesterday. The better job on the other two trades was we just punched out down below and made the bears prove that they could take that level out. They couldn't. So you can be short. You can make money short. You have to be opportunistic. You have to be opportunistic. You have to take your profits where you find them. You can't be an ideologue and say, wow, we're done going up. It doesn't look like it. When we're done going up, we'll be done going up. And then we can do other stuff. But for now, these dips are buys. the hourly mid-band is support. 2717 is a granite floor. 2800 to 2805 now is a granite floor. And 2852 to 54 is sure as hell a granite floor under this tape. Bulls need to they got to hold the rounding now. They got to stop playing around. Stop going back into 28s. If you're really serious about doing the next 100 to the upside, you need to be done with 2900 now. So I'll be interested to see how this day plays out. It should be pretty good. Okay, so off the open, volume weighted average price is down at 93. Hourly mid-band 85. Proprietary moving average and the 5-minute mid-band are both at 91. That's what happens when you do a 30-handle news, 10, 20, 40 handle almost news blast off just before 8:30. So everything kind of moves away. So we still have 40 minutes until we open, but 2,900 is going to be a big deal. If the bulls are for real, they need to hold it. All right, everybody have a great day. Be safe, be healthy, take care, trade them well. Recording of yesterday's webinar is out, and we'll have some more stuff out on social. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.